What's going on, everybody? This is Matt, aka the Lumberjack Landlord, coming off of fresh two more product reviews that I did for you guys. I think they are absolutely killer. That said, this is probably, if not the most important video I've ever done, probably the second most important video I've ever done. The reason why this video is so important is this was the start to the process that I had in having the discussion with my bank that I needed a different type of product than what they offered. This was a fairly lengthy process, but not as nearly as long as you would think. This was something that took basically weeks to get approved, not days, not months, but just weeks to get approved. But these were the data points that I shared with my bank that gave them an understanding of overall of my entire business, not just the part of the business that they had, as well as understanding what the goals for my future business were going to be. This is something that I talk about really often, which is instead of just being an investor, instead of just being a borrower, you need to be an operator. Banks really get behind operators because they know that operators are dealing with the day-to-day. They understand everything about their businesses, or they certainly should. And if you can convey where you are, where you want to go, and then eventually where you believe that that will put you and end you up, that is something that they are far more likely to get on board with. Again, the target for this type of a conversation is not your loan officer. It just isn't. You need to be talking much higher on the food chain to either an executive vice president or to their senior lender. Those are the people that you need to be getting in front of to say, this is me, this is my current business, this is our track record, this is where we would like to go, and this is where I believe that this will put us if we're able to do this and work on this together. So all of these things are factual items. This is basically the deck of listed items that I took them through. This is a PowerPoint that I prepared. And so I'm just going to take you through it. It's really, truly just a couple of slides. I want to take you guys through this, show you what we're really talking about. And then I think you guys will get a pretty good indication of exactly what you're going to be able to have. So let me do this and I'll share my screen with you guys. In being able to share my screen with you guys, we'll be able to show you pretty quickly exactly what this is going to look like. Give me just 1 second here. Okay, so we're going to be able to show you guys this exactly, and I think that this will actually answer a lot of your guys' questions. Hey, how'd you get a product created for you at a bank? Because by law, they can't only offer you that product. That would be unfair. They have to offer it to everybody else. Now, if you, granted, have one house, this is still worth pitching, still worth presenting to them, because you want to paint for them a picture of the future that as we head into these distressed times, you're in the position to acquire those assets, but you will need a bank that's willing to work with you in order to do that. I think that far too often people leave it to chance and then they're dialing for dollars. You need to create relationships with your small and medium-sized local banks. I recommend looking at how big these banks are. Look to see that they're at least 500 million. And I would say go up to about 2 billion. I think those size banks are the ones that are community banks. They're in the community, for the community, and of the community. I think that's where we're going to get our greatest value. So without further ado, I will share with you guys the exact data that I reviewed with this bank and then showed them my process. Hopefully this is helpful to you guys. So you are now seeing LLP group by the numbers. This is Lumberjack Landlord Property Group by the numbers. LLP, not an LLC. It actually doesn't even exist, but you know me as Lumberjack Landlord, and so that's what we're calling this. But what I highlighted was, here is my current dollar amount in loans. This is my exposure. Then I actually highlighted for them, and I'm just going to talk about this because it doesn't really matter to you guys, and I certainly wouldn't share it. This is the amount of loans that you are exposed to. That way they saw my overall exposure, that they weren't my only bank. They're not the only game in town. And then also, this is what my exposure to you is. That way, They don't need to go hunting for that. Make someone making or giving a yes decision as easy as you can. Don't have them hunt for the data. Give them the data that they need to take action. The second thing, this is my entire portfolio value. Now, this is not based on the assets as far as the debt on the assets. This is based on the actual portfolio value. The next question is, Matt, where do I get that value? Here's all you can really do. You can look at some of the different things out there. I've looked at Ownerly. I'll have a review coming. I've looked at obviously the Zillow's estimate. There's a bunch of places that you can look for this. What we try and do here is we try to utilize, hey, we have these 20 appraisals that were done. We used to go back as far as 2 years, but now in this crazy market, we'll say these were done in the last 6 months. Based on these having been done in the last 6 months, and then we kind of modeled the other ones based on price per square foot for these other items or for these other units based on bedroom count. So we kind of give them a little bit of a swag number. Again, just be able to defend your math. And when you give that number, be able to come up with a reasonable number or explanation of how you got to that number. Next is showing my LTV for my entire portfolio. Now, 56% LTV for my entire portfolio. So they look at it and say, okay, so let's just say the market goes down 30%. I still have 14% loan to value. I still have 14% of equity. And based on the number of properties that I have, that is something else that probably makes them feel pretty comfortable. The next thing that I talked about was I've gotten 67 loans with my business or my entity, 67 loans. What banks want to hear is A, that you've done it before, B, that you've done it to a certain level of volume so they can kind of gauge for themselves. Okay, that makes sense. One of the other things that I talked about in that 67 loans was 5 of them were this year, 10 of them were last year. And then we talked about the previous year, which I believe was 4 or 5. So they started to see, wow, this business is really scaling. We're really starting to see this really grab a hold. And this guy clearly understands his markets and he clearly understands delivering results. The next thing that the banks really care about is they don't want you to quick use them and get a loan done. They want you to use them, have a loan, and then let them hold the loan, servicing it so they can make money. Even the closing costs that they put into those closing documents don't begin to cover all the hours, all the work, all the underwriting, everything that goes into that for them to really make money if you just end up flipping that thing in 3 months. That can be a total nightmare for them. They'll do it because they're there to service. However, and they're to service you as your bank. However, there's no way that they're making money on that stuff. So I don't do that. And what I call out is my average loan term was 11 years. 11 years was my average loan term. So this is something, again, that's very, very critical, which is if you look at the entire lifespan, obviously the stuff that I just newly acquired doesn't make sense, but I can also show them this is our plan for that property. This is why we expect to hold that loan. I mean, if rates go down below 4 for commercial property again, they'd have to go down to about 3.5 or 3.25, and we'll still own that product. We'll still own that property, but we don't sell out of a lot of those properties. And the ones that we do plan on doing something different with, we actually will use a different debt structure and short-term debt to acquire to then sell. So they want to know that they're going to have that for quite some time. That means that they're going to be servicing it, making money on that loan, and that's what banks are there to do. Now, next, over 4,000 on-time payments. That's all of my loans for the history of my portfolio. 4,000 on-time payments. I've never been late. Put yourself in their shoes. What are they thinking right now? I think he might be an okay risk, but we'll prove it out in the numbers. But this is, again, this is your swag. This is the numbers that you want to put in front of the people making the decisions. Don't lie, don't fudge, but make sure you're calling out the numbers that are most valuable. That number is most valuable. It's proven that I'm a person of my word, that even when through tough times in 07, 08, 09, we still made payments. We still were on time every month. And we recognize that we're the ones that are going to eat last. And sometimes because of that, not eat. Debt service to rent ratio. Now, this is a new concept that I brought up. Again, brand new concept. But one of the things that I think is really important is if we talk to a bank about yield, they're going to think bond. And that might not be a bad thing. But what they're really concerned about is what is your actual debt service cost on a monthly basis? And then what is the ratio of that to the rents that you're driving? So when we talk about this number, this debt service to rent ratio, the bankers are always talking to me about debt service, debt service, debt service. Well, if we have $10,000 a month in debt service and $20,000 a month worth of rent or worth of rental income, after we've taken care of not only the debt, but any other ancillary costs associated, we actually share with them this number that, hey, our debt service to rent ratio is 43%. So real quickly, $8,600 on $20,000, that gives you a 43% debt to rent ratio. If this is a number that's not that impressive for you, there's other numbers here that you can share. One of the things that you can share is this is what market average is for a typical asset purchased in this market. This is where my returns are. That's something that's really important because they're trying to understand, are you just another borrower or are you an operator? Next is over 1 year of debt service in reserve. If you're a newer landlord, you likely don't have a year's worth of debt service. However, build for them some assumptions. Talk to them through some of those ideas. Say, we do have this number of properties. We do have this much set aside from an emergency perspective. And our capital structure is very conservative because we put this much away for vacancy. While we've never hit those vacancy rates, we still put that much aside. While we've never hit these maintenance rates, we still put that much aside. You want to be building for them the idea that you have a conservative fiscal financial model. And that will, again, as bankers, they want to limit risk. And if they don't, when it gets to an underwriter, they sure as heck are. Specifically, we know a certain underwriter that's on another channel that doesn't understand the graphs. And so because he's so ultra conservative and an underwriter and completely adverse to risk, he believes the sky's been falling for 2 years. That last thing said is 98% pay rate during the great pandemic. We talk about that because so many other landlords didn't experience these level of returns. We talk about that because we say, here's really what this did for us. We were there for our tenants. We took care of our tenants. We were in constant communication with them. And if there was a need, we were able to work with them to get the need addressed. This is something that shows you're a great operator, not just a borrower. Last slide in this absolutely amazing presentation is, I just put this one together and said, we are more than borrowers, we are operators. I take them through exactly what my process is. My daily market review. I review the market daily. We use our own analytics based on rents realized. We're putting our numbers together of what a debt deal is worth because we own other deals in that market and we know what the rents can be. And that makes us more than just guessers or spreadsheet managers. That makes us operators. Property meets the requirements. We share with them the model. We are disciplined investors. We limit offers, i.e. we don't have 100 out all the time. We're more focused than that. And then lastly is 25 better returns than our competition. We talk about that because we say our competition is the market rate. And so if that is 10%, ours is 12.5. They want to see why they should lend to you because money is not finite. or money is finite. They only have so much to send out there. And part of them creating this product for me was my telling them, I'm going to take a bunch of the other loans that I have with these other organizations, and I'm going to bring them to you if you can give me a package where it makes sense for me to do that. So I brought over 9 loans to them that were seasoned, that were making money, that were, significant returns on capital. And that made doing those 9, doing the next set of loans, as well as allowing me to purchase more, that's what helped make that possible. Rent maximizing model, the rent maximization model, gap analysis. We talk about, this is what we're seeing a lot of these things rent for. These are the pie in the sky numbers from the A class. And then this is where we sit. We sit between the two. We're not the cheap, we're not the super expensive, but we're closer to the super expensive than we are to the cheap. And because of that, we'll always have pricing pressure that we can apply up at the A level. They're never going to apply pricing pressure to us because we know that they can only go so low, and then they start losing money because of all the fees that's associated. That's one of the great things about these corporate landlords and about these, Wall Street corporations. Their fees are huge. They're really, really, really expensive. My costs are much, much lower, but I can deliver excellent product. And so at, let's say, $2,000 a month, they're losing money. At $2,000 a month, I'm just making 22%. I can make that happen. In fact, then people have to then make the decision, I'm trying to downgrade, I'm trying to save some money. I'm going to go down to this class of property because it's not that big of a downgrade. And I'm going to save significant, significant dollars because they're usually still going to be around 26, 27, 28. So you're going to pay a 30 or 40% premium to be in that A class. Next on this particular point, budget and update. We've done over 100 rehabs. We bring to them examples and showed them, this is what we did in this property. Here's the befores, here's the afters, and here's what the cost gap was. We don't go in and gut everything. There's a particular investor where I am that every single time they go into a place, they absolutely gut everything. They shouldn't do that. They're gutting out a lot of things that don't need to be gutted. And even though they can say, hey, it's brand new, they're still not going to get A-class numbers. I can get to the same point that they can. I can get the same rent that they can just by making more strategic upgrades. But because they have that model, it costs them more. They show lower profit on that property for a much longer period of time, and they're not actually getting any more rents. This is something that is critical when becoming a great operator, is understanding where return on value is going to be and how much that return on that value is going to be. Tier 1 tenants. This is something that we talk about often because everyone thinks that tier 1 tenants only go to A-class properties. That is absolutely 1000% not true. We get tier 1 tenants all the time because our screening process brings us tier 1 tenants all the time. Wherever we advertise, we make it very clear to see, here's our expectation of income. Here is our expectation. As you see here, 3x net income is the only way that we're going to have that conversation with you. You have to tick that bell. You have to have a 680 credit score or greater. And if you're applying with roommates, we'll actually do the cumulative score divided by the number of roommates to make sure that if one person's got a bad number or a not as good number, the other 3 have good numbers or great numbers, that we know that there will always be that opportunity for them to chip in if need be, because we get the entire payment in one lump in some cases. And in others, we just know, hey, we'll send out a group message saying rent is still late. Please make sure that you take care of it. We don't have to say who it was because everybody starts talking, hey, whose rent's late? And that always hastens the situation and gets things taken care of. And then lastly, along with this is high credit and payment proof. So high credit is really the key for us. We actually don't do these really lengthy and extensive applications. We don't charge an application fee. I know, stupid, it's fine, but I'm not looking to get rich off of applications. People have a hard enough time finding a place. The last thing I want to do is be one of those landlords that's collecting your $50 or $75 to do that. It's just not the way I do business. And we have enough units where, again, we can take care of our pay structure for our folks to make sure that we're getting a decision on somebody great, and we're doing it quickly. So if you've taken care of your business as a tenant, there's not going to be any app fee. We make sure that you have high credit and proof of payment to your landlord for the last 3 months. None of this cash stuff, take my word for it. And a 3x net income. And that can be cumulative. We have some units that are, $3,500 a month that are rented by a group of people. We want to make sure that at that 3,500 that you have at least a 10,500 net cumulative from the group. That way we know, we've seen the numbers. In 20 years, I've done 9 evictions, and 7 of those evictions were people that I made an exception for. Gets me every time. Lastly is the property is now live. We have 99% plus rent collection. And why the reason we say this is because we do have some people, we almost always have somebody that hasn't paid or paid late. And so there's almost always that process. Often we're able to get them back on the right track. We're able to work with them, talk through the process with them. As I said, we're often able to get them back on the right track. So at the end of the year, we are seeing 99% rent paid between vacancy or eviction or a tenant that's displaced. The last thing, and almost the most important, is 200-person waiting list for our units. We've tapped into the COVID program. We've tapped into housing in all 3 of the towns we do business with. We've also tapped into a local aid and assistance program. All of those different areas, they have 200 people waiting for units. Now for us, we want to make sure that the market gets a chance at our units. So we put them out to the market. However, if I ever am in the position where I don't have a massive response, at last count for our last unit, we had 80 responses over the course of the weekend, 80 inquiries. If we ever get to the point where we don't have that, I very easily can go back to housing, any of the other places, and say, I put this out to market. For some reason, it didn't resonate. Do you have anybody that's looking for this? And they will likely send me 10, 20, 30 applicants saying this unit's available, and people will instantly apply with my simple link that we use from our property management system. Okay, last 4 data points. 15-to-1 offer to deal ratio. This shows that we're disciplined. We do make offers. We do know the numbers, but we're not going to deviate from those numbers just to get a deal done. So we offer 15 for every one, or make 15 offers for every one that we close. Data driven. All the decisions that we make are data driven. Here's all the data that we use to make decisions. Conservative LTVs, 56%. I think you'd agree. Any bank would be pretty excited about that. And then cash flow based. We have nowhere in here calculated anything for increase in value. Nowhere do we account for appreciation. Everywhere that we look in this presentation, it talks about cash flow. Cash flow, cash flow, cash flow. Every decision that we make is based on their cash flow, creating our cash flow, the updates that we do that create better cash flow, our better cash flow than our competitors. Cash flow, cash flow, cash flow. As my son says, cash flow. So guys, hopefully this video was helpful for you. I know there's things that in your eyes that I missed, but I'm the one who got a bank to make a product for me. And that was because not just the data that I shared, but the relationship that I have with them and their ability to say, he's been a good customer. He's going to get approved somewhere else. It does make sense for us to see if we can put something together. And that relationship with my banker, she is absolutely amazing. So shout out to Tina. She's absolutely fantastic. And she did a phenomenal job in articulating these things, in trying to work with me to then create something that she came back to me and said, this is what we can get approved, and here's how it's going to be priced. And quite frankly, she gave me a reason, so long as that program exists. Largely, she's given me a reason to not ever leave. So I appreciate her very, very much and all the hard work that she put into this. I just shared with her the numbers. Hopefully this helps you guys. And for those of you who are trying to go from new to good and good to great and great to elite, hopefully you're able to learn something from this. And again, there's no too soon of time to be trying to talk to those people in the bank to at least understand the position of how they feel about you as a customer and if this is something that they would ever entertain. So as I always say, I take a ton of time to create great content for you guys. Please hit the subscribe button, hit the like button, and on this particular one, share it with your friends. Check me out on my live stream, 11:30 a.m. Eastern time on Sundays and on Instagram. Lumberjack Landlord signing off. Appreciate all you guys. Hope you have an absolutely fantastic rest of your day. Take care, everybody.